All right, well, thanks for joining us. I'll go ahead and get started. We're right at 2 o'clock. We are going to talk today in this webinar about the conversion of the business property tax credit to a business property tax partial rollback reduction. I'm Erin Molnix with the Iowa League of Cities, and Jess Vogel is our communications manager. Also on here to make sure things go as they're supposed to. We'll go ahead and dive in. It's actually a brief set of materials today, but that'll be good. That'll give us a chance to answer questions and get anybody going places they need to be as we anticipate a little bit of weather this afternoon. So on your screen now, you are seeing on the left side a little snapshot of an information sheet that we have on our website we developed over the interim spring and summertime that talks about what this conversion is. We've had a lot of questions coming in more recently though during budget season, and so we thought the webinar might be helpful to kind of answer some of those questions. Just briefly, I'm going to talk about the history of the business property tax credit. So that came into creation during the 2013 legislative session, along with some other property tax reform, which you're probably well aware of, commercial and industrial revenue reduction being another key piece of that. And so not to be confused, this is separate. So also in 2013, under Senate File 295 at the time, there was a business property tax credit created, and it offered a credit to tax to business properties, so commercial, industrial, and railroad. And they had to apply to get the credit. It worked very similar to the homestead credit, and it did not flow through local governments. It flowed through the state systems and state and county systems. Didn't hit local government as far as budgeting purposes. Now, last year, the state legislators, so law change, got rid of the former business property tax credit, and in its place converted over to sort of a two-tiered system, I think is what the state calls it, the business property tax partial rollback reduction. So in place of the former business property tax credit, there's now a permanent partial rollback reduction on business properties. So again, that's commercial, industrial, and railroad properties. So the first $150,000 of taxable value for these business properties, so all of them are eligible, will be taxed at the same rate as residential rollback for that budget year. So for fiscal year 24, right now that rollback is 56.4919%. So also on commercial, industrial, and railroad property, that first $150,000 of taxable value would be taxed at that rollback rate. The remaining taxable value of the business property over that $150,000 threshold is taxed at 90%. That's the second tier. And as Jess reminded in the chat, if anyone has questions, feel free at any time to unmute yourself or drop them in the chat box as well. Okay, so the next slide covers that the state appropriation of up to $125 million annually is available to backfill this reduction to local governments. Now, under the former business property tax credit, $125 million was the maximum that could be used towards the credit. And at that time, it worked like the homestead credit, that it would be prorated, so the business property taxpayer would simply get a smaller credit. Under the new structure, the state appropriates the same $125 million annually to sort of backfill or reimburse the revenue reduction created by that new tier, that rollback reduction on the first portion of the property value. But now if that appropriation is insufficient to cover the reductions, it's the local government revenues are reduced. So it's not prorated credit to the business property taxpayer. So since it's fixed at 125, up to $125 million appropriation to help reimburse, it's difficult to calculate exactly when that might be exhausted, and then there wouldn't be enough backfill to cover the local revenue loss. When this passed last legislative session, Legislative Services Agency at the state estimated that fiscal year 2029 would kind of be a ballpark for when they thought that this gap would begin to occur, that there would be more losses in local government revenues than the maximum $125 million appropriation from the state would cover. And there's a variety of reasons that make that difficult to pinpoint when that might occur. For example, one would be that the state does not have a record of how many business properties would have been eligible if they had applied under the business property tax credit. But now under the new structure, it's automatic. There's no longer an application process, and all business property are automatically given the rollback reduction. Another reason for that, we don't have our crystal ball to see how many new businesses are created over time. So they would also take a share of that pot, so to speak. Another reason might be that the residential rollback fluctuates year to year. And kind of as a side note, we do anticipate in the short term that that's going to go down. So that would create a wider gap, more to fill with the backfill or reimbursement out of the $125 million appropriation to do that. And of course, there could be legislative change or something else that would impact that residential rollback as well. And then that would also impact this particular change in structure.
You do have a question in the chat. It is why this change in the legislation?
Well, this is my guess as to the intent was to alleviate the administrative burden that the state had. I do know from my work with the working group way back in the 2013 to 2015 years following the original legislation that created the business property tax credit, that it was quite a process. They had to convert their systems over to begin to administer the and do the application process for this. And so that's why that would be my guess as to the change in legislation. I'm not sure beyond that. There may have been other reasons. Okay. And then how does a local government get the backfill? Do we apply for it? We're going to cover that in a moment. And so if I don't address that and cover that, let me know and we'll circle back. So the next portion, so that's kind of the history, but a lot of you have asked questions as you get into your budget process about how you might estimate this and how does this plug into your budget. I heard from one person that said that their county actually gave them a composite business property rollback rate. And so I would say that is a very straightforward way. I would just verify, and I can suggest it to them, verify that it's not an average, but a composite rate, and then it controls for other changes that might be in there, so that you could make that estimate. But I would not expect most counties would be providing that. I could be wrong. So then another method would be to analyze your valuations, your taxable values, and then compare the difference across. And I've heard from several of you that some of your valuation difference might be due to TIF. And so just to keep that in mind, if we subtract the difference and we analyze the assessed to taxable value for the same property classes, then we can get an idea of how to estimate this for budget purposes. And I've been talking a lot with Ted Nellison at the state, at Department of Management, And he shared with me that he anticipated creating a tool to help simplify this process that you see right now on the screen. And on Friday, he actually sent his lists a tool that would be able to estimate this very process, make it a little simpler. So he said, due to the amount of questions and uncertainty around what to enter into the budget, they created this tool. Was sent out on Friday, and if you did not receive it, but you would like a copy, do email Ted at Department of Management. And I've got his email there, ted.mellison@iowa.gov, and he's very good at, very responsive. You will see in his directions from his email a link of where you should go to download your 100% assessed valuation by class by levy authority and your taxable valuation by class by levy authority on the Department of Management website. Once you have those two Excel documents specific to your city and his tool downloaded, so they're all three based in Excel, then you would be able to enter in the information you need to do the estimates. It's actually pretty straightforward. I was tinkering around with several communities over the weekend to see what I'd come up with. But here's an example. If your community, you pull up your community's assessed and taxable values for commercial and industrial property, you do need to break down non-TIF and TIF. And my advice is when you pull up those assessed and taxable spreadsheets for your city, make sure to look, I think on the left was the non-TIF, and if you scroll to the right, you'll see the boxes for TIF. They aren't on separate rows, they are by column. So you would simply input your city's value right here in these gray boxes. The blue is automatically populated, it just adds these for your assessed and for your taxable. And then you would click the tab at the bottom that says property tax, and you would enter in your proposed property tax rates for your city in these lines. And Ted has provided the sample. So this would be a city that their total city tax rate was $12.37. And they've used the 810 and the emergency levy, a few others, just as a sample of what that screen looks like. It looks very much like your budget sheet. Then you would click back over to the original BPTC estimator tab, and it would show you a breakdown by fund of the amounts subject to backfill. Now, the estimator tool, Ted told me to please emphasize, is an estimator only. And also it doesn't take into consideration if there's a point, if there's a point at which the reimbursement or the backfill is insufficient to cover. It's just giving you the amounts we feel like we anticipate the backfill being enough to cover for at least the short term. But like I said, I believe back in the fiscal note that came out when this law was changed last year, kind of estimated around 2029 for when that might be insufficient to cover the revenue loss to local governments. Okay, a question there in the chat box. Let me see. We sent a similar tool on the 5th. Do we now? Right, so just to clarify, on the 5th, Ted sent you another email and tool for the commercial and industrial property tax replacement. That is something totally different than what we're talking about today. That is the original backfill that was created back in 2013. And so this is related only to the business property tax credit and the conversion over to this new 2-tiered system. So that's great to clarify, because I know that question would come up again.
The other question, go ahead.
Can an individual city accurately determine if the lost revenue would be replaced by the estimated backfill given that replacement amount? How do we know it will take until? That is a great question. Can we accurately determine if it will be replaced? So basically, when the state appropriation is insufficient to cover it, how would you know that? I think if that's a fair way to summarize your question, each year, and let's see, Jeff, if you have the second link from the state that you could put in the chat box as well.
Yep.
This is the information the Department of Revenue, maybe you already did. The Department of Revenue has shared by September 1st. Oh, let's see. So it says on their website, if the total for all claims is more than the appropriated amounts, the claims will be prorated, and Department of Revenue will notify the county auditors of the prorated percentage by September 30th. So the county auditors would have that information by September 30th. And then I just wanted to clarify the word prorated. It's not that the credit to the taxpayer then would be prorated. They would receive the full revenue rollback reduction. Then the amount of backfill would be prorated to the local government. So you would still see a decrease in your total revenues if it went up, if the total was above the $125 million amount. They would still give up to the 125 million, and they would prorate that out. And then any amount of reduction above that would be a hit to local governments.
The question is, so is that 125 million limit per county limit?
No, it's 125 million per year, but that's for all local governments combined. And so local governments, so not just cities, but also counties in there, and schools, I guess, could be a part of it, but probably cities and counties. And that makes up the. That's a great question. I'm not sure how they prorate that out, if that is by county or how that operates. I will see if I can find out though. And when we send out the recording and the slides, I will see if I can clarify that question. That's a good one. Okay. So then Ted has indicated that these amounts that are the estimates should be entered on line 18 of your budgets, the other state grants and reimbursement on the revenue page of the budget, which we've heard that question come up as well. So I think that's probably the part that you tuned in for. I have a couple more slides that I would cover. If you were curious how you would calculate this, just on an individual property or property unit, which is a new property unit, was a new definition as of the original business property tax credit. So they've carried that forward. So how would you calculate this on a business property, individual business property or property unit? You would take your taxable value up to 150,000 and multiply it by the residential rollback rate for the budget year you're looking at. So for fiscal year 24, for example, that'd be 0.564919, then multiply it by the city levy rate over 1,000. And then you would do the second tier, plus the remainder of the taxable value, the portion that's over $150,000 in taxable value, times 0.9 to represent the 90% rollback, and then multiply by your city rate over 1,000. And then you would subtract from the total taxable value times 90.90 for 90% times the tax rate. The general rule of thumb that, and I'm going to do an example in a moment, but the general rule of thumb is that we've been seeing it's around $400 to $700 per eligible property or property unit. that it has at least 150,000 of taxable value. It really depends on the average tax rate of the method used there, but that's actually pretty conservative because, and I'll show you on the next slide, a sample that we use kind of close to an average tax rate is around $13. And that's getting close to 700 right there for that individual property. So it could be even higher. But as an example, we used an eligible, a business property with a taxable value of $250,000. So the first 150,000 is taxed at the residential rollback rate. So for fiscal year 24, that's 56.4919%. And then the tax rate we use is $13. Just for sample purposes, it's close to an average. So then the math there gets us to about $1,102 for that portion. Then the remaining $100,000 of taxable value, since the total taxable value for the sample property is 250, we've already covered the first 150,000. So there'd be 150 or $100,000 of remaining value that's taxed at 90% rollback rate. So the math there is the 100,000 times 0.9 for 90%, and then multiplied by the city tax rate over 1,000. So $13 over 1,000 for the sample. So that portion's 1,170. And then we just add those up. So for this sample property, the total is about 2272. Before this change, when it was went through the state process, the entire taxable value would just be taxed at the 90% rollback rate. So the math there is the 250,000 in taxable value times 0.9 for the 90% rollback, and then multiplied by the $13 or whatever your city tax rate is over 1,000. So for this sample, it's $2,925. If we subtract that from the tiered system approach, we get about $653. So for this individual property, it would be generating $653 fewer dollars for the city portion. Okay, so that is what I had. I will double check the chat box on questions. And we will be sure that we're going to share on our website the recording, and then we can send the registration list for this webinar, also a copy of our link to the recording as well. Question, so if the county will tell the city, so the county will tell the city if there was a proration of the backfill amount. Do we know how that's communicated, a formal, informal? I believe it to be a formal process. It says on the Department of Revenue page, and I'm reading this. So they're calculating the payment. If the total claim is more than the appropriate amounts, the claims will be prorated, and Department of Revenue will notify the county auditors of the prorated percentage by September 30th. And then Department of Revenue makes the payments in equal installments in September and March. Any corrections must be submitted to the March payment, and no corrections allowed for prior years or after the March payment. Yeah, and so there is a little bit more detail on that Department of Revenue website that Jess shared. It's geared towards county auditors and city and county assessors on how to calculate the assessment limitation on the two-tiered basis that we talked about. Let's see. For the amount we estimate to receive, do we allocate to the different general fund levies? Okay, if that is the case, would we reduce the amount of the insurance certified by the anticipated? But I don't know the answer to that one. I don't know beyond what Ted shared, how you would be able to allocate that across the different levies. What his tool shares here. So there was a question on how, once we have the reimbursement or the backfill 2.0, if you will, how do we put that into track it amongst our different levies, how much would have been generated by the different levies. I believe just in the Department of Management's tool, it only has this breakdown by fund. So general fund, special revenue, debt fund, or capital projects fund. If you would need further breakdown for the budgets, I would suggest getting in contact with Ted to answer that further. And then I discussed using, this appears differently on the county disbursements. Lastly, does this kick in with fiscal year 24? Yes, it kicks in your budget process for fiscal year 24. I believe it says the change is effective with fiscal year beginning 24. Yeah. So that it is for fiscal year 24. As far as it appearing differently, my understanding is it appears quite the same, that you would use the 4463 revenue account to track it, and that the suggestion was to you separate it out with a different row or call it out with a different account there, just to keep those two separate, because you're still receiving in all likelihood your commercial industrial replacement claim backfill as well.
Erin, this is Teresa Rollshafer.
Yes.
And interestingly enough for me, and Ted was gonna try to look at it. I took the amount of business property tax credits that the city received here this past December with our tax payment from November. I took that total and then assumed that we get about that same amount again in March, right? And then I used the calculation tool, and I assumed the calculation tool is giving us our full amount for the year. And
Yeah.
my amount that I would get back by the calculation tool was almost a fourth of what I'm getting back right now, which
Really?
didn't make much sense to me, because I would have thought more businesses get it now than we're getting it before, unless there was an error before. And so I'll be interested if any other city has that same situation arise for them, if they could let you know, Erin.
Yes.
And
Yeah.
I guess just to see or brainstorm together about what maybe is happening.
Thank you for bringing that up. That's the first time I've heard that. I would have expected those to be similar. And so just the fact that they aren't, we'll need to kind of dig into that and see why that might be different. I don't believe that there was a proration of the amount last year. I believe it was under that $125 million threshold. When I say proration there, I mean with the former business property tax credit, it was a proration of credit to the property taxpayer. Now, under the current structure, that proration is just going to be of the backfill amount. So, you'd feel the pain in your budget versus it prorating to the taxpayer. But so I would think that those amounts should be closer because I don't think that there was a prorated amount of credit to the taxpayer. And like you said, it would be automatic now, would not require the former application process, so everyone would automatically get it. So if others are having the same experience as you fill out your tool, do let Teresa as well as myself know, and we would like to get that clarification out to you if you're seeing that same issue. I appreciate you bringing that up, Teresa.
It looks like another said that they had the same experience. And then you have a question, will the cities get the ETC even if they don't budget for it?
I believe that is an automatic process that you would get the business. Well, so now it's not going to be called the business property tax credit, but it would be a reimbursement for the loss that you would have under this new two-tiered system, or backfill 2.0, as we kind of called it as well. you would probably want to put it in your budget, but since it's automatic that those businesses are getting the reduced rollback, that would impact your revenue in the budget. So you'd want to include the estimate. And Tony says, okay. Okay, so Tony says you took what you got in fiscal year 22 and it was higher. Okay, only about 2,000, but yeah, thought it was weird too. So, yeah, please keep me up to date. I'll check with Ted, especially since it looks like it just wasn't an error with one city. And we'll see if maybe there's something going on, an error in the tool or something like that. And Tracy also, okay, thank you. I'm very glad to know that. That's very helpful. We can track that down.
Aaron, excuse me to interrupt you, but I didn't know, maybe, I'm wondering if the special revenue one is also including TIF, because I got pretty big chunk of TIF business property tax credit in my tax money this time.
Okay, and so maybe that is missing from the tool.
I don't know.
Not sure. I'm gonna jot that down and I'll circle back with Ted on that too. Revenue. Okay. Well, stay tuned as we kind of investigate what those differences might be there. We'll make sure that we communicate back to the folks that registered today. Were there any other questions that I might have missed? I know, Jess, you were looking through some of them as well. And do feel free to unmute and ask if I might have missed something. If not, I won't keep you. I will stay on the webinar a bit longer if you do think of a question. And I'm going to, well, let's see if I can stop the recording. I do